Welcome back, everyone. Today is an absolutely massive milestone for the series. Just yesterday, we hit our historic Day 100 by bridging the stock market and the crypto universe, which was amazing. But today? Well, today we are stepping into a brand new century. It is Day 101 of our 365 Days to Financial Freedom journey, and honestly, the energy in here is just off the charts.
It absolutely is. We are so incredibly thrilled to be here with you guys. We are kicking off a completely new era of our journey today. We're shifting from foundational knowledge straight into advanced algorithmic strategy.
And to mark this monumental shift, I just have to say it. Welcome back to the Neuro Finance Masterclass. We have officially entered Phase 2 on Day 101. This is it. This is where we take the training wheels off. We are moving way beyond the basics now and really stepping into the mindset of a true market architect.
Exactly right. And to pull that off, we need a roadmap. So, here is our liquidity compass for today's explainer. 1. Entering Phase 2. 2. Decoding Bitcoin dominance. 3. The 4-quadrant matrix. 4. The capital flow waterfall. And 5. We're going to lock it all in with the architect's strategy.
Okay, let's dive right into this. Section 1, entering Phase 2, becoming the architect. Like we said, it's time to take those training wheels off. Think back to what we've already conquered together. On Day 91, you mastered tokenomics. On Day 92, you learned how to track on-chain whale movements. You've got the building blocks down.
Right, but Phase 2? Phase 2 is all about seeing the entire board. You've mastered the pieces. Now you need to understand the invisible currents pushing them around. Just look at the stark reality here. On one side, you have the amateur. They buy random altcoins just praying for a pump. It's reckless, hope-based gambling, really. But on the other side, the architect. The architect tracks BTC.D to anticipate the exact direction of the global liquidity wave. It is cold, it's calculated, and above all, it is fiercely protective of your capital.
Which brings us perfectly to Section 2, Decoding Bitcoin Dominance, the gravity meter. So what exactly is this tool the architect uses? Well, we're going to strip away all the complexity right now. This is the primary mathematical tool that dictates the gravity of the entire crypto market.
Exactly. This is the master key for scaling your neurofitness. Bitcoin dominance, which you'll see tracked universally via the BTC.D chart, is simply a mathematical ratio. It's Bitcoin's market capitalization divided by the total market cap of the entire cryptocurrency market, all multiplied by 100. And what's brilliant about this is it illustrates exactly how much of the market's total wealth is parked safely in the king of crypto versus, well, literally everything else.
Now, what's really interesting here is how we put this into practice. Let's say you pull up the chart and see a 60% dominance. What does that actually mean for you? Well, it means out of every single $100 in the entire crypto universe, $60 is parked strictly in Bitcoin. The remaining $40? That's scattered across thousands and thousands of altcoins. It shows you exactly where the gravity of the market's wealth is centered at any given second. Let's move on to Section 3, the 4-quadrant matrix, mapping market scenarios. Because once you understand that gravity, you can actually predict the future. Think of this as your algorithmic cheat code. By looking at just two simple variables, Bitcoin's price and Bitcoin dominance, you can literally predict the exact fate of your portfolio.
Let's break this down because it's absolutely crucial. If Bitcoin's price is up and its dominance is up, that's what we call a liquidity suck. Capital is fleeing altcoins and fiat just to hide in Bitcoin. Bitcoin flies, altcoins bleed. Do not fight this, hold Bitcoin. But if Bitcoin is up or even flat and dominance drops, wow, that's the holy grail. That's altcoin season. Massive capital is rotating out of Bitcoin into riskier altcoins, causing them to absolutely explode.
Right, but then we have the darker side of the matrix. What if Bitcoin's price is down, but its dominance is up? That, my friends, is maximum pain. Bitcoin is crashing and altcoins are getting completely decimated as panicked capital just flees into stablecoins or fiat. And finally, if both Bitcoin's price and dominance are down, that's a structural bear. The whole market is deflating, but money is exiting Bitcoin even faster than altcoins. It's a clear sign of complete market exhaustion. Let's move to Section 4 and see how this builds. The capital flow waterfall, the liquidity route. Because here's the thing, liquidity inside crypto doesn't just move around randomly. It doesn't bounce from coin to coin by chance. It actually cascades in a highly predictable chronological sequence. It totally does. It behaves just like a waterfall, dropping through 4 distinct stages.
Stage 1 is the vanguard. Fiat currency flows directly into Bitcoin. Bitcoin pumps, its dominance expands, and all that media hype begins. Then comes Stage 2, the shift. Profits start flowing out of Bitcoin and into high-cap established networks. Think Ethereum or Solana. Next up, Stage 3 is the alt-run. Capital spreads even further down into mid-caps and sector leaders like DeFi, Layer 2s, or AI tokens. And finally, Stage 4 is the degenerate blow-off. Money rushes into microcaps and meme coins. But listen up, a serious warning here. Once this absolute euphoria hits, the smart money completely vanishes. They exit right back into stablecoins and fiat, and the whole cycle resets.
Okay, wrapping up with Section 5, the architect's strategy, temporal allocation. So how do we actually use this to protect our capital? This is where we bring the theory into immediate protective practice. We want you to apply this algorithmic framework to your very own holdings right now.
Exactly. So here is your cognitive task for today. Step 1, open the BTC.D chart on TradingView. Step 2, overlay it with the Bitcoin price. Step 3, identify exactly which phase of the matrix we are currently in right now. Look at your crypto allocation. So the crucial point is, if you are holding a portfolio full of microcap altcoins while Bitcoin dominance is aggressively expanding upward, your strategy is fatally misaligned. You need to align your portfolio with the matrix, wait for those rotation edges, and position yourself ahead of the wave.
We want to leave you today with this provocative reality check. Look at your charts, look at your portfolio, and ask yourself honestly, are you fighting the algorithmic flow of global liquidity? Don't be the amateur just hoping for a pump. Be the architect. Map the grid, follow the dominance wave, and protect your capital. Thank you so much for joining us for this explainer on Day 101, and we will see you next time as we continue our 365 days to financial freedom.